This is CGTN, China Global Television Network.
Hello there, welcome to this edition of Global Business Africa. In the course of the hour, we'll run through all the business news stories you need to know about from across Africa and beyond. But let's start the program as we always do, the run through the market. So another day of a lot of trading pretty much across the board. But 2018's disaster at the Nairobi Securities Exchange, that continues right into the new year. This time though with a profit warning from Britam, the financial services provider. It expects full year earnings of about $3.8 million for 2018. Compare that to 5.18 million about a year earlier. One of the factors cited for that dip, the bear market at the NSE that ended 2018 with a market cap of $4 billion lower. 7 companies there have issued profit warnings so far in the last 6 months. Here's what's coming up tonight. Kenya's Capital Markets Authority warns investors against taking part in an ICO. Libya's oil output suffers a setback after a takeover of a key oil field. And Apple shares tumble after warning about a dip in sales in mainland China. All right, then let's start tonight in Kenya, where the Capital Markets Authority has cautioned the public against taking part in an initial coin offering, an ICO, in a new cryptocurrency called Kennycoin. Now, the venture is being aggressively marketed by an outfit called Wiseman Talent Ventures. A bit to protect investors, CMA is pointing out that this company is raising money from the public through the issuance of digital tokens and further providing a platform for their trading. The company is also apparently promising a guaranteed return of 10% a month on the initial investment in the coins, which are issued at about 98 cents or so, or rather 0.98 cents at the ICO level. Now they're being purportedly marketed at about $19.57 in this exchange. Now the CMA says that the Kennycoin ICO poses substantive risks on information asymmetry, liquidity and fraud as well. Still in Kenya, the National Transport and Safety Authority has stopped the licensing of 14-seater vans, commonly used here for public transport. They're usually known in this part of the world as matatus. Now, that decision throws into confusion thousands of investors who operate on various routes across the country. Only 24 out of nearly 200 14-seater matatu saccos, these are savings and credit societies that essentially run these routes, last month obtained temporary court orders restraining the regulator, and now they're having the operating permits renewed. According to data compiled by the National Statistics Bureau, there are more than 37,000 14-seater vans somewhere on Kenyan roads. The Association of Matatu Operators, which represents about 195 of these savings and credit bodies, has sued the transport regulator of its decision to not license them from the 1st of January. From East Africa to North Africa. In Libya, the state-owned company says that the closed Sharara oil field will lose an estimated 8,500 barrels of crude a day just through looting. The NOC declared force majeure on the 17th of December at Sharara. That's its biggest oil field, after it was taken over by tribesmen, armed protesters and state guards who were demanding salary payments and development funds. 3 security breaches and looting have taken place at the 315,000 barrels per day field over 2 weeks. The national oil company is reiterating its calls for the implementation of emergency security measures to allow Sharara to be reopened. Now, the internationally recognized government and the NOC agreed on a security plan last week to protect the Sharara field, and the NOC chairman Mustafa Sanala warned on Thursday that attacks on the field could destroy the Sharara system and damage the much wider economy in Libya. Now, the officials in the Liberia Electricity Corporation are saying that more than 60% of that country's power is actually stolen through illegal connections. Now, that theft then translates to annual losses of about $35 million a year. CGTN's Alexander Majala has the details.
For most people living in Liberia's capital, the sight of a technician climbing up an electricity pole in Monrovia is not a welcome sight these days. The Liberia Electricity Corporation says that about 60% of its annual output is being stolen. The state-owned utility has launched a widespread crackdown on homes and businesses that have illegally connected to its grid. LEC says about $35 million is being drained from its coffers every year and that it needs to tap every cent to rebuild the country's power sector and boost supply.
We're in discussions with the Ministry of Justice, and we're hoping to get some traction on those discussions with a view to moving the theft of electricity from not a misdemeanor but to felony, and perhaps classifying it as economic sabotage, because effectively that's what's happening.
Founded by freed American slaves, Liberia is Africa's oldest modern republic. The country's infrastructure and public services were destroyed during civil war between 1989 and 2003. Efforts at post-war recovery have been short-circuited by falling prices of Liberia's main exports, iron ore and rubber. An Ebola outbreak from 2014 to 2016 only served to make things worse. But many of Monrovia's residents are charged up. They say the LEC should focus on quickly resolving problems in its supply chain rather than being in such a hurry to cut their cords.
I can't sleep in darkness. The reason why people are doing this thing because LEC, they're not trying to strategize. You understand? They need to come up with strategies where the Liberian people will get covered easily. You get the money, you understand, to pay to follow the procedure. But anytime you go there, they say there's no meter, there's no meter, there's no meter. I got 2 restaurants running here. Before I even got that meter, it was not easy. You understand? The reason why I bypassed that same thing, I just moved in this community.
Some citizens like Helen Pokolo, another Monrovia-based entrepreneur, urges a more inclusive approach in which communities could help the LEC stop people from stealing power.
I don't have electricity. I have to rely on my generator, but then I can't afford to have all my things on it. I'm appealing to the LEC to come to our rescue. We go to their office all the time. If they will just supply us, we could then stop people from tampering with the line. But because there is no solution to give us electricity, that's why people keep doing illegal things on the line.
It is estimated that only 12% of Liberia's 4.7 million people can plug into the country's current capacity of 126 megawatts. Liberia's overall demand for electricity is expected to climb to about 300 megawatts by the year 2030. Alexandria Majala for CGTN.
Now, to say that 2018 was a pretty rough year for South African equities would be quite the understatement. The all-share index at the JSE closed the year 11% lower, posting effectively its worst performance since 2008. The top 40 didn't fare any better, with a decline of a similar margin. Investors have snubbed emerging economies for a range of reasons. You've got the US-China trade row, uncertainty over Brexit and a slowdown in the global economy, and domestic issues, of course, in South Africa. Between all of those, you've got a range of factors to blame. So where do South African equities go in 2019, which, remember, is also an election year in that country? That was the focus of this conversation between CGTN's Sumitra Naidu and the CEO of the JSE, Nikki Newton-King.
We did see quite a boom going into the beginning of this year, and it was really based on Ramah, but I think the disappointment set in and people felt like the changes that we were hoping to see wasn't quite going to happen the way they had expected.
It's been an interesting year in the country. When we started the year with the first 3 months, really the country grasped by the sense of opportunity and hope. And I think once we recognized that it was more difficult to get the flywheel working as we move towards inclusive growth, I think the more somber reality that actually it's going to take time sort of hit home. But also emerging markets risk off globally certainly had an impact. South Africa isn't an economy on its own. It certainly is an economy very much connected into the global marketplaces. And if investors are risk off generally on emerging markets like they have been, that has an impact on us as well.
We may just have another tumultuous year on our hands in 2019.
Yeah, it's going to be noisy next year. It's not for the faint-hearted. But even within that, there are things we can do to make sure that our country financial position is in the right order. There are things we can do to get growth going by making very clear decisions on certain policies that would enable more investment to happen. For instance, big infrastructure investments. People know where we're looking at, the types of areas that we're looking at. Government's done an immense amount of work in that regard. We have to now say, we've done the work, let's commission the jobs.
We've just come out of a recession, but we have issues around state-owned entities that are still plaguing this economy, and of course investor confidence. I mean, the likes of Eskom and the issues that it's suffering right now, it's so cash-strapped, it has the ability to push us right back into recession.
The problems that Eskom presents for the economy are enormous. Not only does it have the ability of potentially taking us back into recession, because if there is no energy, people can't run their factories, run their offices, etc. That impacts overall economic output. Okay, but it also has the very real potential of impacting the fiscal position of the country, and then that puts us into a whole series of very serious junk status type conversations, which we've been working so hard as a country to avoid in the last couple of years. And so Eskom is a large example of the same sorts of questions that need to be asked and then answered for many state-owned enterprises.
We've had so many breaches this year in terms of corporate governance. We had the likes of KPMG, McKinsey, Steinhoff, and people are still waiting to hear what is the latest, who's actually going to be held accountable for what happened there.
I think the reality is that investors locally and internationally are asking much more trenchant questions about management, about direction, about disclosure than they'd asked before. I mean, we've issued a very detailed set of proposals that would adjust our governance framework, result in more disclosures, etc. I would like to see faster action on investigations and certainly prosecutions.
So you're referring to Steinhoff there. The JSE has started an investigation. When are we expecting to get the results from that?
So the JSE has joint responsibility for investigations with Fisco, and we do the initial investigation. We hand that information over to the Financial Sector Conduct Authority, known as Fisco, and they publish monthly their update of where they are with that. They're still investigating a whole host of alleged contraventions in the Steinhoff matter and in all of the other issues where there has been noise, but those conversations and those investigations are ongoing.
We have Brexit that's unfolding, we have US-China trade tensions, and we also have our own general elections. It looks like we could be in for another storm.
Yeah, but I think once again, you have to compare South Africa to other emerging markets, and I think that we stack up extremely well in a number of aspects in relation to other emerging markets. We have a very sophisticated capital market system. We have very well capitalized banks. We have a very sophisticated exchange environment which people trust. If you unpack the things that are happening this year, which we tend to sort of overlook as we look at as we stand back and say, wow, the all share is off quite considerably, or net foreign disinvestment is significant this year, we forget that we have had a whole host of public inquiries into state capture and into areas that have been of concern for all of us. We forget that there have been massive management changes made at some of our most important state-owned enterprises. And these are all indications of action in the right direction. But the reality is that big change takes time to gather momentum. But if you stand back and you put these things in and you reflect one thing after another, the things that are changing in the right direction, you would far rather be talking about South Africa in 2018 than South Africa in 2017.
All right, then let's start our run through some company headlines with a look at commodities. The new Barrick Gold Corporation is considering options for its stake in Acacia Mining. That's the mining subsidiary that it has in Tanzania. That includes a possible sale, as Barrick works to end a near 2-year-long tax dispute with Tanzania's government, which has basically frozen matters and operations in that country altogether. The firm share started trading on Wednesday following its merger with Randgold Resources, which owns about 64% of Acacia Mining. The unit has not been able to export any gold during this $190 billion tax row. Also, Uganda's Civil Aviation Authority says an Ethiopian Airlines passenger plane overshot the runway at the Entebbe International Airport on the morning of the 3rd of January. Ugandan authorities said that all 139 passengers on board the Boeing 737-800 aircraft got off safely. Ethiopian Airlines says the aircraft was not damaged during this incident. And finally, we're going to come back to this a little later. Apple cut its revenue outlook for the first time in nearly 2 decades, citing weaker demand in China. Now, the move triggered a slump for Asian suppliers and a wave of much lower price targets for Apple on Wall Street. Apple CEO Tim Cook said that revenue for the fourth quarter will be about $84 billion. It's down from earlier estimates of between $89 to $93 billion. That lower forecast effectively means Apple is reporting a holiday quarter slowdown for the first time since Cook became CEO in 2011. That's a run through your company headlines. We're about 15 minutes into the hour. Time for a short break. Here's what's coming up next. As Apple's shares tumble after warning of a dip in sales in China, we'll ask, what next? And Tunisair's national carrier plans to make huge staff cuts in order to stabilize its cash flow.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global Business. Only on CGTN.
Every story starts out like this.
Okay. We'll head up now.
But beyond the rush of the numbers, there's always a more fundamental question. What happened? Who has been affected? When market-moving decisions are made, who's responsible and why?
Let's get some reaction on ground. Joining us in Johannesburg is Sumitra Naidu. Hello, Nairobi.
This is how all stories begin. See how they end. Only on Global Business.
How will your world change today? What happens here? What happens there? Or what you make happen for yourself? If it matters to you, it matters to us too. Your stories are the stories that need to be told. Africa Live. Find your voice.
Right, and let's return to that Apple story. The US firm has cut its revenue outlook for the first time in nearly 2 decades, and it's citing much weaker demand for its key asset, the iPhone, in China. Now, that move did trigger a slump for Asian suppliers, and it's also triggered a wave of much lower price targets for Apple over on Wall Street. In fact, right now we're trading at about 144.90 on that particular share. So let's get to the latest details on this. Daniel Rangers joins us now live from Washington, D.C. with more on this. In some respects, Daniel, doesn't this decline remind the market of the concentration risk that essentially lies with Apple, with so much of its revenue coming from just a handful of products, especially the iPhone?
Apple's major success has undoubtedly been the iPhone, because nowadays almost all of us have a smartphone in our pocket, and even if Apple only has a small amount of the overall market, nonetheless it's a premium product that has very high profitability. It's easy to understand how Apple's got here, but now it's here, the smartphones are more resilient, and as Apple's Tim Cook pointed out, people can now swap out batteries before making the decision to buy a new one. So typically in the past, iPhone users were swapping out every 2 years. Now they are looking at what's being offered, many smartphones at about $1,000 a pop, and saying to themselves, maybe I could hang on for another year. And in fact, the average length of users is now popped up to 3 years. And also carriers are no longer offering these upfront deals for very low cost smartphones and then rolling in the cost into the monthly plan. So you're getting this sticker shock. Seeing a price tag of $1,000 makes you think. So Apple's core users are sticking with them, but it's much harder, I think, to gain market share when you are looking at $1,000 or more to start up a relationship with Apple. Therefore, it's that sort of barrier to entry of increasing the volume of Apple users that I think is the real challenge for Tim Cook now.
Indeed, and Apple's sales volumes in China have been falling since the fourth quarter of 2017, at least according to the data set that I looked at. So in that sense, how can Apple management say they didn't see this coming, especially when domestic rivals in China like Xiaomi, Huawei, Oppo, they've all been gaining market share?
I think it's a legitimate criticism of Apple that they talked up China's sales too much in November during their last quarter call. And so, the fact that Tim Cook's coming out with a letter to investors, which is something that's quite rare for Apple, seems to suggest that he himself takes the view that actually conditions have changed that much that it would be his legal duty to inform shareholders of this change of outlook. But certainly I think before then there's legitimate criticism that they didn't do enough to signal to investors that there was this very strong data point suggesting a slowdown in iPhone sales. And therefore, I think we're likely to see more criticism going forward. But at least at this point, Tim Cook has laid a marker stone to suggest that things are slowing down. The language is fairly stark on this investor letter, although there are some bright points as well in terms of Apple being, still a very, very strong earnings company and therefore still, to some extent, a very, very solid stock to own, even despite this massive loss in market share over the last few months.
Right. One last question for you, Daniel. We're seeing also disappointing data on manufacturing PMI coming out of China as well. So combining that with this news that we're seeing now from Apple, how deep a slowdown is the market expecting in manufacturing, but also on the consumer spending side in China?
Well, I think it's widely known that we're coming to the end of a major cyclical upturn. And it's all about how to manage that, change in global dynamics. The problem for many investors and for many companies at the moment is this US-China trade fight, because it's adding us an extra level of uncertainty to outlook. It's making planning much more difficult. So we have this March the 1st deadline for some kind of a deal to be done between the US and China. If that March 1st deadline is not met, then we find that companies are going to have to take a very dim view of the outlook going forward. With the mix of all these geostrategic issues and the fact that things are softening in China, Europe and elsewhere. So down the line, I think in the next few months, it will be absolutely crucial to see whether this transition that we're seeing in the global economy is managed in a fairly controlled way and everybody can kind of handle a slight slowdown, or whether this turns into something more severe.
Indeed. At this point, perhaps it would be appropriate to slide in the line about how we should be aware the E-Days of March. Daniel Rangers there live in Washington, D.C. Thank you. Now, on to North Africa. The Tunisian state carrier, Tunisair, plans to make some pretty deep spending cuts in order to tame its running costs. Auditors of the carrier's books are also sounding the alarm over what they describe as widespread corruption within the company. CGTN's Adin Chwachi filed this report.
The first report for the year 2018 that since 2016 the national carrier Tunisair has had aircraft take off with more than 5 failures.
Tunisia Air has given flight clearance to planes with more than 5 failures. This is despite the fact that this kind of problems have caused aircraft accidents for other companies.
Judges also mentioned suspicions of corruption in the management of the stock of spare parts for Tunisair aircraft, During the period 2012-2017, spare parts were removed repeatedly 22 times without being placed in other aircraft, which may conceal overruns related to flight operations.
There are 658 cases of transfer of equipment for maintenance by specialists, but there has been no trace of a possible recovery of these parts by Tunisair Air Techniques.
These violations, which had a negative impact on the flight schedule, forced the company to bear additional aircraft rental charges.
The bill reached nearly $5.3 million during the 2014-2017 period. This is in addition to passenger compensation charges due to recorded delays in flight schedules. The company is suffering from major financial difficulties.
According to the audit report, Tunisair Techniques does not respect the deadlines for the completion of maintenance work on aircraft which remain grounded, causing a disruption in flight scheduling. The Court of Auditors report has sounded the alarm about mismanagement at the state-owned company. The Ministry of Transport said that despite the unexpected conclusions which will be investigated, Tunisair is still one of the safest airliners in the world. Adan Shawishi, CGTN, Tunis.
All right, and so Rwanda is known colloquially as the land of 1,000 hills. Quite literally, that's not a joke. But it's also an awesome place to produce coffee. Due to poor infrastructure, however, Rwanda's coffee is little known outside its borders. But now, a Chinese e-commerce platform is helping to boost the country's coffee sector.
Rwanda, the land of 1,000 hills, is a perfect place for the production of coffee. However, coffee from the country is largely unknown to people outside its borders. But the situation is now taking a complete U-turn since the visit of Chinese President Xi Jinping in July last year. During the visit, several cooperation agreements between the two nations were signed. And in October 2018, Chinese e-commerce giant Alibaba launched Africa's first ever electronic world trade platform in Kigali, the capital.
After 3 months after the President Xi visited Rwanda, the EWTP was launched, which really so fast, and then it's really incredible. And we already sell our coffee to China market, and we were repaid. So to say this really fantastic, this cooperation is a cooperation that is really working.
The project is a platform that enables small and medium-sized enterprises to participate in cross-border electronic trade. It also aims to create a relationship between both nations' customers. Some of Rwanda's coffee brands that are being sold currently on Alibaba's Tmall international platform include Gorilla Coffee, West Hills Coffee, and the Land of 1,000 Hills.
EWTP is a solution for all the program of coffee sector. And then it increased up to 30%, and 30% the income that the growers used to have.
The future of Rwanda's economic development is digital and data-driven. And the introduction of e-commerce platforms like Alibaba in the country is expected to largely contribute to the economic growth of Rwanda. Noel Makugu, CGTN.
Now, every year, the fashion world works flat out to outdo the previous year's pieces. And 2018, in that respect, was no different. African designers presented show-stopping creations that pushed the global fashion game from the typical and the boring into the wild and the edgy. Here's a summary of how designers on the continent took on the year that was.
Kicking off Africa's year in fashion was South African Menswear Week in Cape Town, an event that has come to epitomize what is edgy and fashion-forward on the continent. But there's a rip in the seam when it comes to mentoring and promoting young designers.
I think that we really need to pay attention to young African fashion designers in terms of providing. In fact, a lot of the countries in Europe and in the US are taking a lot of ideas from African designers. And I think that the more we can create platforms for them to express their creativity, the better for them to create economic opportunities in the industry.
Crossing over to West Africa, Nigeria hosted one of Africa's biggest fashion events, attracting over 45 designers from 14 countries worldwide, as well as supermodel Naomi Campbell, making a big statement about the uniqueness of African designs.
I don't think that we're more important because we're being discovered by the outside. We always were important. We've always worn these clothes. It is interesting and nice that we're getting noticed for our things, but it's nothing new to us. We've always dressed like this. We've got a lot of style. It's nothing new, and the world is lucky that they're getting to see what we've done all this time.
Ghana has also caught the international fashion spotlight due to celebrity endorsements and fast-rising fashion designers.
I have a lot of aspirations on taking my brand to a bigger global platform to reach more people, because we've gotten to the point when we've got so much good stuff here. I've got so much good stuff here, and as a Ghanaian designer, we should be pushing to make sure that you could walk into a store in New York, maybe a Walmart or any other store in New York or Paris, and be able to find something that's from Ghana.
In the Democratic Republic of Congo, activists delimited global fashion by presenting models with special needs on the catwalk as part of an initiative aimed at fighting for inclusive representation in fashion.
Sometimes we see ourselves as people who do not have much value. We see ourselves as lesser than. But because of this event, I have regained confidence in myself. I can walk on the runway and forget that I have disability and forget about that complex.
In East Africa, costume designer Scholar Namwai showcased her latest collection, hoping to change mass market perception on fashion in Kenya.
I was searching myself and trying to find out what I really liked or what I really wanted to do. And I was always into fashion in high school. I loved modeling, I loved creating designs from t-shirts and fabric at home. My mom was a seamstress, and every time after school we would go to where she was training as a dressmaker, and I would collect pieces of fabric in the market and make some clothes for my doll.
With such diverse and talented designers hard at work across the continent, 2019 and beyond could present a blank creation canvas to celebrate unique and strong African fashion. Beryl Oro, CGTN.
It's time for a short break on the programme. Here's what's coming up next. We're about 80 days away from Brexit. We'll be reviewing the country's preparations. And China cuts tariffs on a range of imported goods in order to spur growth.
Business in Africa is at a crossroads. We celebrate those who are adopting and thriving despite the challenges, from grassroots to big businesses. Global Business takes you along for the ride as we track the making of a giant. Only on CGTN.
Welcome back. These are the stories we're tracking at this hour. China's Foreign Minister Wang Yi is in Ethiopia, where he started his 5-day tour of Africa. In Addis Ababa, he said that the purpose of his visit to the continent this time is to further strengthen Sino-African ties, based on the recently held FOCAC summit in Beijing. Later on, he will be in Burkina Faso, the Gambia and in Senegal. The United Nations Security Council is expected to react rather strongly to Somalia's decision to expel a top UN envoy from the country. Nicholas Haysom was accused of violating Somalia's sovereignty. Now, days before his expulsion, he had raised concerns in writing regarding the role played by Somali police in recent demonstrations in Baidoa. Those demos were sparked by the arrest of a former Al-Shabaab commander. In the Democratic Republic of Congo, the preliminary results from the country's recently held election may be delayed. That's according to the Electoral Commission. Now, the elections body had planned to announce the results on Sunday, or at least preliminary results on the 6th of January, but there has been a low number of voting tally sheets received so far. And finally, North Africa. Egypt's President Abdel Fattah el-Sisi has ordered the creation of a committee to tackle what he describes as sectarian incidents. This comes just days after an explosion killed 3 tourists and their Egyptian guide. The committee is to be headed by the President's advisor on anti-terror matters. Board members will be drawn from the armed forces, police and intelligence services. The board will report directly to the President, Abdel Fattah el-Sisi. That's a run through your headlines. Right then, on to matters further afield now. With less than 3 months to go until Britain formally leaves the EU, manufacturers in the country are building up stockpiles. At least they were in December of 2018, recording the highest PMI reading in 6 months across the country. Now, the closely watched IHS Markit Manufacturing Purchasing Managers Index rose to 54.2, up from 53.6 in November. The stronger inflows of new business and the increase in stock purchases in the UK has been linked to manufacturers' preparations to try and protect themselves against the risk of border delays after Brexit. The UK is scheduled to formally divorce the EU on the 29th of March. In the meantime, the UK's Prime Minister will start a round of talks with the EU leaders this week, seeking clarifications on aspects of an exit deal she spent years negotiating, but which legislators back home are widely critical of. This week, she's expected to speak to the German Chancellor, Angela Merkel, as well as the President of the European Council, Donald Tusk. She's seeking legally binding assurances that a backstop plan will have a time limit and will not, as the critics have charged, be an open-ended way to lock the UK into the EU. Now, the backstop is designed to avoid setting up a hard physical border between Ireland and Northern Ireland. This is what the UK's Foreign Secretary had to say barely 24 hours ago.
When Theresa May comes back with those reassurances that she's been seeking from the EU, that the deal that is on the table is not going to lead to us being permanently trapped in the customs union against the will of the British people, I think that she will find a way to get this deal through Parliament, and I know that's what the British people would want. So the social consequences in one of the oldest democracies in the world of not going ahead and leaving the EU on the 29th of March, as we've been instructed to do, would be devastating.
Comments from Jeremy Hunt there, the UK's Foreign Secretary. So let's get you more details happening in the UK ahead of Brexit. Richard Bestick is live in London for us tonight. So Richard, is it just factories that are building up the stockpiles now, or are all other import and export dependent sectors doing pretty much the exact same thing?
Well, Ramah, just about everything is being affected. Every aspect of life is being affected by Brexit here. And you even heard the government minister there talking forlornly of the potential scale of the disruption. Hundreds of fridges are being bought for medicines in the event of disruption to supplies. The government's paying $150 million to hire its own ferries, albeit from a company that has no ships. And now the government's preparing for a massive publicity drive this week to prepare the public for the possibility of a no-deal Brexit. Of course, government ministers are saying all this can be avoided if members of Parliament simply vote in favour of the Brexit deal the UK Prime Minister Theresa May negotiated with the EU. But it's got to be said, Ramah, there are few signs of that happening anytime soon.
Indeed. So for years now, though, large-scale customs infrastructure hasn't been needed to deal with traffic going into and out of the EU. So what investments in personnel and hardware are needed just to cope with the volume of cargo traffic ahead of a no-deal Brexit?
Well, the infrastructure plans appear to be at a fairly basic level, given the load they'll be handling. Every day, around 5,000 cargo-laden trucks drive through Dover on Britain's southeast coast en route to Calais in France, all uninterrupted by customs checks. To prepare for what would be a truly radical change, the government is preparing an abandoned airfield to serve as a holding area for thousands of trucks, and miles of highway are to be turned into another vast parking lot. Dover handles around 17% of Britain's trade traffic, so the challenge is immense. Dredging has now begun on a new port near Dover, and ports in the north of the country are preparing to take some of the traffic. But really, Ramah, after 45 years without customs checks, it's going to be a tough call for the ports authorities unless a deal can be agreed.
Indeed. What about the air side of things? How are carriers like British Airways and Ryanair preparing to handle passenger and cargo traffic in the event that there's a no-deal Brexit?
Well, it's certainly true that without a deal, the UK would no longer be part of the EU's single aviation market, which governs flight from 44 countries. The prospect of that grounding all flights in and out of the UK is remote, but there would be some disruption. To limit it as far as possible, the European Commission has said flights from the UK into and overflying the EU will be allowed for 12 months to ensure basic connectivity. Similar emergency measures are also being drawn up in Brussels for the financial services sector and the haulage industry. It is, as they say, Ramah, complicated.
Complicated indeed. One last question for you, Richard. So the Bank of England has forecast quarterly GDP growth that's relatively low, just 0.2% in the fourth quarter, similar thing for the first quarter of 2019. Is that lower forecast all Brexit related, or are there other factors at play here?
You can't enter into any conversation without Brexit raising its head. Ramah, every aspect of the economy here is impacted by it. According to the Centre for European Reform, the UK is currently losing $500 million a week because of the Brexit impact on the economy. A 2-year study by economists at the Bank of England concluded that a no-deal Brexit would send the British economy into a recession even greater than that suffered in the financial crash 10 years ago. A separate study by the Treasury found that Britain would be poorer in every Brexit scenario, a no-deal Brexit being the worst of all cases. Possibly the biggest Brexit hindrance to economic growth, though, Ramah, is the uncertainty surrounding what's going to happen. Theresa May takes her Brexit deal back to Parliament next week with a vote midway through the month. Ramah, you'd be a brave man to bet on the outcome. It sometimes seems that landing a spaceship on the far side of the moon is easier than getting Brexit through this place. It probably isn't, Ramah, but sometimes it seems like it.
Indeed. I might just take you up on that bet, but we'll leave it there for the time being. Richard Bestick there, live there in London. Now, Black Swan events, generally they have enormous impact, even if they're very, very difficult to predict with any sense of accuracy. Nonetheless, with a trade war running between the US and China, signs of an economic slowdown coming up in data from China to Europe, we're going to try and see where Black Swan events for 2019 may lie. Here's CGTN's Nawija Bahil with a look at the forecast for Europe and Great Britain.
2016 was a defining year for Black Swan events, with US President Donald Trump's election victory and Britain's decision to vote for Brexit. Analysts woke up to the idea of almost unpredictable events having huge impacts on our lives. So what could 2019 have in store in terms of the extremely hard to foresee? Perhaps unsurprisingly, all eyes once again are on the world's largest economy.
The big swing variable is the US, because the US did so well in 2018, and it will also slow in 2019. And so I think that's really why the market is focused so much on the US right now. The fact that Europe will be a bit slower next year, China will be a bit slower next year is less interesting, but it's really the scale of the US slowdown that's going to be the big factor.
Japanese bank Nomura has released its annual list of improbable scenarios for next year. Known as grey swans, these are more likely than black swans. It says the idea is to get people thinking outside the box when considering financial risk.
For example, the end of populism. Everybody is talking about populism as the big thing. We think there is a chance that actually it fades. It stops being such a big thing. Another grey swan could be that oil prices collapse to $20. Most people, again, are looking for oil to stabilize, if not go higher. And then the other big grey swan we're looking for is a major market quake. So every market collapses across the world, and we see a broad and global risk aversion.
In recent months, global stock markets have witnessed a series of sell-offs, indicating a possible end to the equities bull run that accompanied Donald Trump's presidency. And experts say the signs don't look very promising for Wall Street in 2019.
Chances of recession, the probability of recession sometime in the next 18 months, 12 months is rising. So it all points to a very, very weak stock market year. Of course, the black swan would be the economy takes another leg up. It expands at a faster pace, the Fed keeps pumping liquidity in, and the stock market, it takes off.
As we've seen on the global stage in recent years, accurate forecasts are difficult to get right. But if there's one thing we can be pretty much certain of in 2019, is that there's going to be further uncertainty around the world. And there's one issue in particular that's causing more financial risk than any other: the trade row between the world's two largest economies.
Say that Trump and President Xi won't get together sometime in 2019, sit around the table, thrash out their differences, and this trade war starts to dissipate and they kiss and make up.
In Europe, Brexit looms as the main risk facing the continent. With less than 100 days to go until the UK's planned departure from the EU, there's still no agreement on how that would happen. The possibility of the UK crashing out of the bloc without a deal is increasing too, something that may have seemed a black swan not too long ago. And lastly, there's the small matter of the future of the US president.
The other big one in the case of the US is the impeachment risk for President Trump, because the Mueller investigation will be drawing to a close in the first part of 2019, and so we'll see the results of that.
Impeachment may still be unlikely, but given the lengthy nature of that investigation, it's not so improbable as to make it a black swan. More broadly, 2019 looks set to be another difficult year for the global economy, and in an uncertain age, it may hold a few surprises as well.
China has cut a range of tariffs and export duties for businesses since the start of 2019. The country's Commerce Ministry says the pace of the cuts will accelerate as the country continues with its economic reform program.
Tariffs on 7006 import items dropped on January the 1st. Some of the rates were even reduced to below their previous most favored nation tax levels. Why another round of cuts?
We cut import tariffs 4 times in 2018. First, we cut tariffs on some medicines to lower costs for cancer patients. The second tariff cut was given to cars. The third was targeted at consumer goods to satisfy the needs for consumption upgrades. The fourth tariff cut was for intermediate goods. That cut means lower prices of goods used in production, which serves supply-side structural reforms.
There are more cuts to come. China will lower tariffs for 298 products related to information technology on July 1st. That sector already enjoys most favored nation tax rates. Liang also said that tariffs on many IT products will be gradually lowered and eventually removed before 2023.
These tariff cut policies will definitely increase the scale of Chinese imports. This is a very obvious signal of China's opening to the world.
Liang said that China's trade environment will be more complex in 2019 and adjustments are needed to shore up trade. China has also lowered tariffs with some other countries including New Zealand, Peru, and Georgia. All of the measures are intended to bolster imports and improve the spending power of Chinese consumers. Song Yaotian, CGTN.
All right, then a quick run through commodity prices here for you. So 2019 seems to start to do the prolonged row over mining taxes in the continent's second largest copper producer, Zambia. So this week it changed royalties applicable on a sliding scale by about 150 or so basis points to between 5.5% to 7.5%. There will be a 10% tax that also applies if copper prices go past $7,500 a ton. There's also VAT. That's going to be replaced with a sales tax come April as part of efforts to deal with a long backlog on that. The mining PS, though, Paul Chander, he says mining companies haven't shown how badly or not they will be affected by these tax changes. For the record, copper prices aren't even close to that number at the moment. The LME futures at about 58.30 a ton. Here's what's coming up next. We'll look at trends and investments in African tech companies in the last year when we return.
Images may appear to be identical, but looks can be deceiving. The difference is not always obvious. It has to be discovered. There are always different sides to a story. We put the focus on the details. To see more, to understand better. CGTN. See the difference.
The greatest journeys, the greatest sights, the greatest adventures.
Here in Panater, this weir allows the locals to walk on water.
We're far more than just TV news. We're your passport to the wonders of Africa.
To bring you stories of struggle, survival and hope.
So let's explore. CGTN. See the difference.
Welcome back. Let's focus on tech for a moment. African economies have seen a boom in investments in the area. There's a lot more capital being funneled into new and interesting ideas and tech businesses. In 2018, a number of young innovators showed why homegrown solutions could be the best answer to many of the continent's problems.
This year saw the continent embrace a mix of homegrown innovation as well as technology invented elsewhere but adapted for local use. South Africa launched an ATM-like vending machine to dispense medicines to patients with chronic illnesses.
This machine is helping me when it comes to time and helps me when it comes to standing because we are sick. We get busy at times because it gets very full. With this machine, you can just get here and punch in your numbers and take your medication and go home.
Malawi, on the other hand, began using drones to implement interventions and stem the spread of cholera. The disease critically hit at least 6 districts following an outbreak in 2018.
It has relieved many things that we didn't know about. As community leaders, we now have a huge task to ensure that our surroundings are clean and tidy.
Minibuses are the backbone of South Africa's transport industry. An estimated $3.7 billion in revenue is generated every year. Skona Kumalo is a 28-year-old tech innovator and one of the drivers of an app that aims to help commuters navigate.
This industry is a gem, it's an actual jewel of South Africa, and how do we increase participation? And the first place that we start is by making it a more pleasant experience.
Over in Cameroon, programmer Zuo Bruno created an internet-free application to track cars. This was birthed when the government shut down the internet during unrest in the country's Anglophone region.
Okay, we'll send an SMS from the owner's phone to the car, and this SMS is telling the car to immobilize, that is to stop the engine from functioning. But of course, the owner can send another SMS telling the car to come back to normalcy. And it can even allow the owner to locate where the car is at any point in time.
Meanwhile, Rwanda is embarking on the world's first blockchain project to track its mining of tantalum. Mobile phones, facial recognition software and GPS tracking are used to flow resources from the mine to a refinery in Macedonia and on to buyers.
Rwanda has demonstrated without a doubt that the minerals coming from Rwanda are conflict-free. And that's not questionable whatsoever. But now what we are looking at is how to continue to demonstrate that with a solution that is cost-effective, that is efficient, and that is adopting also modern technologies that are consistent with how the rest of the world are doing this.
Earth Ranger, also known as the Domain Awareness System, was developed by US philanthropist and Microsoft co-founder Paul Allen. It was as a response to the surge in ivory poaching in Africa.
What we do with DAS is we monitor all our assets, every colored animal, and we also input data which in turn helps us make decisions and plan operations on when we extract the data and analyze.
The software for Sophia, the world's first humanoid robot, was partly developed by an artificial intelligence research company in Addis Ababa. She even speaks some Amharic. Its leaders hope Ethiopia will take the lead in Africa when it comes to artificial intelligence.
We are in the leading edge of AI and blockchain. But nobody thinks that this image is true. Nobody thinks that this is the reality.
Techies are optimistic that the Ethiopian government's decision to open up the economy will take hold in 2019 and fast-track support and development in the innovation space. Alexandria Majala for CGTN.
And finally, the sport of golf has always been viewed as a popular lifestyle choice among a certain demographic. But in Southern California, senior female executives don't just see it as a sport. For them, it's a way to improve their careers as well.
A group of women executives in Southern California is trying to move forward, though a report from Goldman Sachs says more than 400 public traded companies have at least one female board member. A lot of women CEO, CFO, and CIO realize they don't get those positions from resume, but from relationships.
A lot of people golf in business, and I just felt it was important to do. And it's actually kind of fun. I really enjoy it.
Deborah Shard is a professional golfer. She is now teaching this wonderful sport to those frustrated women executives.
If I do quick math, I've played with about 2,000 amateurs just in LPGA-sponsored Pro-Ams. I played with about 10 women. And so I spent all of my career helping men build relationships that advance their careers. I want to do that for women.
You get to learn about their frustration level, what sets them off, and, are they really tightly wound?
Interestingly, they initially planned to play it to learn how to network with men. Now, they also learn how to better communicate with each other.
Because I know that you're communicating with each other and getting together outside of these events, and nothing makes me happier than that.
A report says that over the last 20 years, golfing CEO actually make 15% more money, and that could ironically be another reason for female executives to play, to live their careers to another stage in an unequal pay business environment. Xia Cheng, CGTN.
Right then, a run through currencies as we wrap up the program. The Rand fell to its weakest point in 3 months on the 3rd of January. It was dragged lower as part of a much bigger wave of pain to hit emerging market currencies. It hit 14.55 to the dollar at about 0650 GMT, though it did pare the losses a little later on in the day. Now, the data pointing to a slowdown in China's manufacturing sector certainly hasn't helped. Neither has Apple's warning about sales in China and other EM economies falling in the fourth quarter of the year. It's all red flags all over the place. That's it for this edition of Global Business Africa. As always, we'd like to hear your thoughts on the content you've seen here in the last hour. There's several ways you can get your thoughts back to us. All of them are on your screens right now. I'm Ramah Nyang in the Kenyan capital, Nairobi. Thank you for your company in the last hour. The World Today is up next from Washington, D.C.